everyone. Welcome to the Trading Market Technicals Morning Call video for Friday, February 15th. Just a quick admin note, markets are closed on Monday, so we have a 3-day weekend to enjoy our time with family and friends, and hopefully that will be the case. Anyway, an uneventful day yesterday. Markets up ever so slightly, continues to grind up. We had another inside day, so pattern has been consolidation, one-day breakout, consolidation, one-day breakout, and no volume, no volatility. Market seems to be either looking for the next move higher, which is a break above 1525. Will probably get us up to that 1550, and then, of course, the all-time high of 1575. Markets are well bid up, as you can see, and we don't want to fight the trend, right? The trend is up, remains up, and there's nothing that we can do about it until price tells us that we are probably at a top. Now, I think that obviously a correction is likely coming. Markets just cannot grind higher like this every single day. The question is, how long before it arrives? That's going to be the question. If we take out that 1525, then again, next stop will be 1550, which would be another minor pivotal high. And then, of course, we have a strong pivot, which would be resistance at 1575 again. So, and I've been stressing this for the last 6 weeks. Patience is big in this market. I know for a fact retail traders are getting killed right now because they don't understand the low volatility environment that we're presently in, and it's really important. We're not looking to be a hero. We just need to protect capital and be nimble and be alert and ready when this market does turn around, and be prepared, no less, to say, this is what I'm doing, here's my list of short trades, and that's how we are successful in this low volatility environment. So a trade or two, make a little money, get stopped out, must make some money, get stopped out, trying to build a day. And that's one of my sayings I always like to say is build your day. You know, bank a couple of small trades in first, if you could even find one. If you find a couple of good trades, you bank it for the day, and if you get stopped out or you have a flat day, chalk it up as a decent day, believe it or not, in this environment. Now, this is not going to stay like this. Once the market does correct and does have a really influx of traders either getting out of trades, or we break out higher, whatever the case may be, you want to be nimble enough to say, okay, now I'm ready to get active, because the markets are telling me to get active. So this low volatility environment is not going to continue much longer. There will be a resolution, and whether it be another pop higher, or we start breaking some lows and we start making lower lows in the market. So what we do is, what do we do in this type of environment? We start looking for signals in our indicators. We look sort of, quote, under the hood, and look for where can we find opportunity, either bullish or bearish. And we do that by looking for our indicators, looking for sectors, stocks, large cap stocks. What are they doing? What's China doing? What's Europe doing? And as you see, every morning I put together some different type of ways of looking at the market as a whole, because it's not just a trade, but it's preparing for that trade. And that's hours at night, first thing in the morning, looking through economic data, looking through earnings and upgrades and downgrades, and that's going to give you a pretty good edge on what to do during the day. And if you do nothing, that does not mean you're not working. So it's really important to understand that. All right, so enough of that. I just want to get into the charts here. I don't have much. I have but our indicators, nothing really has happened. One thing I do like is I see the dollar is starting to, dollar had a decent day yesterday. Oh, let me run down the numbers. As you can see, NASDAQ up a point, S&P up a point. Previous that was up 92 cents, and the Dow down 9. So as you can see, nothing really happened. Now, there are opportunities out there. It's just, you have 5,000-6,000 stocks, and if nothing runs across your screen, then unfortunately you're not going to be able to trade that. But anyway, as you can see here on the dollar, we have a nice big spike up, and I mentioned, let's watch this dollar. We have a descending triangle. Usually Now, descending triangles can break lower, but that does not mean it can't break higher. We also have our head and shoulders pattern with a neckline here at 79. Now, that only happens when we break that neckline on a closing basis. So that does not have to happen. So we have two bearish patterns that totally could be negated. Our ratio chart here, our US dollar S&P ratio chart, hasn't really broken to the upside as of yet, but getting a little bit of curling action here. So this will be interesting. If the dollar can muster up a little bit of positive days and really can get going and break above our 200-day moving average, then that'll definitely put pressure on equities and commodities. Commodities are already getting hurt, as you can see in gold and the DBA index. But just something to keep an eye on. And we also mentioned yesterday, briefly before I run into I showed you the open interest. If you look at my yesterday's video, and the open interest, Max Payne is suggesting a slightly lower day, or a flat trading days for the last couple days, meaning yesterday and obviously for today. Now, that's exactly what we had yesterday, and even if we're down 50, 60 points today, those put options will expire worthless today. And it seems to be it's a great indicator to look at. And today, just a big word of caution, you're going to have about an hour and a half of trading after about 11:30, 12 o'clock. And if you have money, close the computers and start the weekend early, because nothing will be happening in the afternoon, obviously, unless something is said overseas or somebody comes out with something real bad. But other than that, and if it's just technicals, I mean, we have, I believe, consumer confidence coming out at 9:55, and Empire State or something like that, but nothing really to drive the markets. Okay, so just please be very careful today. You don't end your week on a good note. You got a 3-day weekend coming. You don't want to be thinking about your Friday and ruin your weekend. Okay, so let's take a look at the VIX. VIX, very subdued here, still at record lows, 1213. Low volatility environment, telling us we have extreme complacency in the market. As a contrarian, very, very, what's the word I'm trying to say is that you want to be not active in these markets. The VIX has not done anything, and that's exactly what it's telling you. Let's take a look at the CBOE, and as you can see here, we had a little bit of nervousness in the markets, but again, we talked about the bravery. Market participants, they're not worried. The longs are not worried at all. They're not looking to protect capital. They're just looking to keep buying and holding, and this is what's happening. Now, I just want to reiterate, the other day I mentioned also about inflows. We had the largest mutual fund inflows in January, and I believe it was close in February, since 2007. And if you look at where the market is, the markets are at its highs. Therefore, to me, sentiment-wise, I think we are very close to a market top. I'm not looking to pick a top, but I'm just saying please be aware of that for the swing traders and the longer-term traders. We are very close to a market top. This does not mean that the market cannot run to 1575, but I'm just saying that we are very, very close when you have large inflows come in where we are here at the market, where the markets are. All right, I wanted to show you the RUK, the Russell, and the junk bond again. Just getting worse and worse. Junk bonds actually starting to come in again. We did have a little bit of a relief rally, but as you can see, every time we had our spikes in the JNK, which is the high-yielding junk bond ETF, we had a nice big market move. And this is, again, I mentioned this early in the week, this is pretty scary. Not that this would happen again this deep, but as you can see here, just be prepared for anything can happen. Here's the junk bond ETF. I put that bullish fallen wedge. Sure enough, we broke out of the wedge. And all it is now is, if you look at this wedge, usually forms a flag. So it's actually now forming a bear flag into confluence areas of resistance of the moving averages, 50 and the 20-day moving average. Now, we did get a little bit of pop on our ratio, and of course, we're oversold. So to me, this is just an oversold bounce. So watch a JNK for risk on, risk off. Now, the IWMs, the Russell, has not done so. Russell continues to make all-time highs, and I'll show that to you in the chart. So let's take a look at the ATR. Wanted to show you this. I haven't showed you this in probably about a week or so. Every time you see the ATR dips, markets move higher. Flat lines, market goes flat. Again, market sells off, ATR rises. Markets rally, ATR sells off. Now we're at these all-time lows here. Well, I shouldn't say all-time lows, but at least where we are in the last couple of years. Now we want to see Do we pick up some steam here since we're basically at support? We broke support, but usually when you break support, it comes back up. And let's see if this ATR can start to rise. If the ATR starts to rise, then no doubt about it, we'll get some sort of a pullback in the equity markets here. Okay, so it's a nice little chart to kind of watch and gauge. Okay, and we'll go right into our index chart. Spiders came back in again today, but again, inside day for the last basically all week. We had an inside day all week trying to test the highs, but we do have a larger channel in this smaller channel here, and if you don't think the markets can kind of grind higher, think again, because it absolutely can. And that's something that that a lot of people are kind of dumbfounded that the markets have not sold off. And to me, I don't doubt anything in these markets, especially when you have algorithms and high frequency trading going on. The majority of it is all computer driven, and you could see it in the price action in the daily chart. So sometimes you have to be a little bit one step ahead of these computers. Okay, so spiders daily. We have sitting in the inside day here, and you can see we're starting to flatline. And this is what I had mentioned about our indicators here. When the markets really go into a sideways consolidation, it kind of unwinds itself. Now, this does not mean this is still overbought, but it's kind of like just sitting here looking for its next move. I would love to see a gap up, a run hard in the morning, and I don't think that would happen today, but maybe sometime next week. A gap up, run hard in the morning, and then clearly reverses. That would be your blow off top, signaling a top. All right, and we haven't had that yet. Okay, guys, here's our chart. Really, I like to see 150, 150 broken on a daily close. Of course, 149.80 would be our secondary low, and then that would actually start getting me excited more about maybe starting to put on a market short. The first thing I would do when the market does roll over is put a market short on, as the markets are so overextended. That would be my first guess, my easy target, and then of course I'll keep you posted on that. And here are some numbers: 1520, 1495 is our first break, and then our target would be 1475. I would look for, and I'll get into lower targets in a minute, but you have some decent areas here: 1446, 1446, 1450. Just rounded off to 1450 would be your secondary target, and then of course back down here to 1400, 1420. And again, guys, it's going to take a lot for this market to sell off. There's got to be some sort of real catalyst, some sort of fear out there before we really start to move lower. But nonetheless, even if we get a 3-4% correction, the markets are still going to be in a bullish uptrend. Therefore, would not hurt me at all to go and buy the market down 3-4%. I'm just not going to buy it up here. And as you can see, what happens, right? As volatility increases, all of a sudden the candles start. We had some volatility here, and then we stopped, and then all of a sudden we have these little sort of melted candles, indecision candles, all just now creeping up higher. Well, it's only going to take 2 or 3 days, and it'll wipe out the whole month of January. So that's what usually happens. So just prepared if you're a longer term trader. Okay, we do have market divergence forming, right? Lower lows, lower highs, higher lows, higher highs, low volume environment. We have a big bearish rising wedge from the beginning of January, but again, it's only bearish when the market breaks down. So right now, market's holding its uptrend channel, and we're still going to wait for that breakdown on a closing basis. But again, guys, nothing wrong with the market at all here, so I wouldn't be fighting looking to get short. Okay, so here's what happens: sideways consolidation, break up, sideways consolidation. My guess, we get another break up, and we touched the 1525, excuse me. So we break out of 1525, we close. Next target will be 1550. Okay. Here's our XLF, and I just want to show you the XLF. Big bearish rising wedge. Had a great run from the November lows, and as of January, we're just grinding higher with these little candles. It's going to take 2 or 3 days, and you'll lose half of this gains here. So caution, I would not be looking to buy banks here, but the banks are healthy. If the banks are running, it's a good sign that that the bull market is going to be intact. And there's nothing wrong with this chart except that it's overextended. And volume really hasn't been too bad. I mean, as you can see here on our indicators, we are starting to kind of get a little bit of market divergence here. Get a little bit of divergence in the XLF, but again, that is not a sell signal until price starts breaking lower. Same thing with the transports. Transports looking really healthy. Do not want to sell off here. So this is something that I will be keeping an eye on, especially this is our leader of our index. If transports continue to rise, markets will continue to go higher. And the diamonds, same thing with the diamonds. We're just kind of chopping around now. If you notice, we had a channel, and then now we have a sideways consolidation. And now that our indicators are above our overbought state, but we're still now just going sideways here. So it's going to take at least a 20-day break on all of these average to get started. The 20-day moving average on the Dow, the Nasdaq, S&P. We use our S&P as our proxy to gauge the averages, but if really need to take out the 20-day moving average on a closing basis before anything else happens. IWMs really strong here, and I'll tell you, this is a good gauge of risk. Now, although the JNK is selling off and the Russell is not, to me, that's divergence. So now we're going to see who's going to win this battle. If Russell continues to go higher, and it can, it's in this nice channel formation. There's nothing wrong with it. I mean, you could see easily $92, $93, $92.5, $93 in 2 days. Easy. So we are overbought. And again, and I keep saying, overbought is not a sell signal. As you can see, I've been mentioning this for the last 6 or 7 weeks. We continue to be overbought all of 2013. Now, again, that'll happen. Something will change. But until then, do not fight the trend. Here's Apple. Apple had a decent little day. Apple was down in the morning early, and then kind of stayed above this little sideways horizontal trend line. So let's see what happens here. Again, to me, just a trading stock. I want to see it really capitulate to the downside before I start accumulating any type of long trade for a longer term trade, actually. But other than this, if you're looking for a day trade, that's all really this should be. Maybe a 1 or 2 day hold. And lastly is the Qs, as you can see here, guys, sitting above the base. The technology sector has been iffy, but I'll tell you, if the Qs and the XLK start to break out higher, there are some beaten down tech stocks that are still have great, obviously still great companies that I would like to look for. And of course, I'll get that. I'm going to be issuing some really good sector alerts, some trade alerts when the time comes. As of right now, this is just a day trading environment. All right, enjoy your weekend. Have a great time this weekend. You have an extra day, and then we'll get back to the markets on Tuesday. I'll have a big, full, long-term picture report again Tuesday morning. Enjoy, everybody. Take care.